So then I wanted to do a full trade breakdown of the trade that I took yesterday on Tuesday, the 3rd of February. This was an EU short, so I'm going to completely break it down. Obviously, you'll see how I trade and my strategy and exactly what I was looking for coming into the day. It was a really, really nice trade, pretty much just a textbook setup. And yeah, we gained a very nice 3R on this trade. So I'm going to completely break it down for you. So yeah, follow along. Take notes if you are interested in learning this strategy, as I will provide as much value as I can in this video. So let's get straight into the breakdown then. So obviously we can see here the trade, a short position. Now, if I jump onto the 1 hour quickly, I'll tell you a little bit why I was looking for shorts. And that's because if I zoom out, you can see we've been pushing up quite a lot recently, been having quite a big uptrend. Now, because of that, obviously, price doesn't just go in one direction. We have to come down to move back up. So I'm anticipating this pullback phase here, and that's basically what I've been looking to play. And yeah, basically bring price lower. We had price make this bearish move down, and this actually caused an internal break of structure, as you can see here. Because obviously, like I said, we're currently in this pullback phase. So each break of structure here is just an internal break of structure, not an external. So nice bearish move down, internal break of structure. So then after that, price is then going to want to have a corrective pullback inside of the corrective pullback, if that makes sense, because we're already having the corrective pullback back down, like I just said. But now I'm looking for a pullback back up into this bearish leg. So that's what we're looking for. We're anticipating a pullback into this leg for then price to sell back off again to continue the main pullback, if that makes sense. So on the 15-minute then, and basically what I saw was price tapped the 50% level of this move down, like you just saw on the 1 hour time frame. Basically what I was anticipating, if I quickly jump on the 1 hour once again, we tapped the 50%, as you can see here, and then from there I was anticipating some sort of reaction and a move down. And as you can see, I did have this 1 hour fair value gap up here, and I was expecting that to get filled and price to obviously tap up higher into the fib as well. However, when price was here and it did react off the 50%, this is basically what I saw as a bit of buy side liquidity being built up, an inducement for price to later on then and come and retake that and tap up higher, fill in that 1 hour gap, and then we can possibly see a move down from there. So with all that in mind, on the higher time frame, coming down onto the 15-minute, we can see we've got our Asia range marked out here. And basically what I was waiting for is price to come up and sweep Asia highs. So we can see this much better on the 5-minute. So we can see price is just consolidating a little bit around here in the morning. And then what we did was we pushed higher and took out Asia highs at the top here. So then once that did happen, all I was waiting for then was basically price to just show me some kind of displacement back down for our bias to then be confirmed that price is going to go short, and that's what I'm going to be looking for. So when that did start to happen, all I'm looking for then is a market structure shift, and as we can see, we've got that marked out here. Now, why is this a market structure shift? Some people might ask. That is because if I mark out this, we can see price pushed up, had a pullback, pushed up, made a break of structure here to the upside, pullback, pushed up once again, making another break of structure to the upside. Then when we had this bearish move down, nice bit of displacement. And then what we did was we broke down and closed below the last low. So we can see that price has now disrespected this bit of an uptrend that we've got here. And we've closed back down below this low, showing us that price is now reversing and wants to potentially come lower. So that's our market structure shift marked out. Then all I'm doing then is waiting for a pullback into a fib area. So I take my fib from the swing high down to wherever price stops and starts reversing, which would be here, and that would be the swing low. So that's my fib marked out, swing high to swing low. And then all I'm doing then is waiting for this OTE level here to be tapped into. And my OTE level is always between the 618 and the 786 level of the fib. And that is basically where I take 90% of my trades from. So what we do then, as price is on its way back up, I'll set a limit order and I'll wait for price to tag me into the trade. So in this case, it was obviously a sell limit order placed just below the OTE, and then for stop loss position, I always have them above the swing high, or if it was a buy, then I'd obviously below the swing low. Now, for TPs, most of the time I always target 1 to 3, and that is because most of the time my stop loss is below 10 pips. If it's 10 pips or above, then I just target 1 to 2. However, in this case, as you can see, my stop loss was 8.2 pips. I don't know why that's there. That should be there. That's where my TP was at 1 to 3. So that's sort of my ruling around where I'm going to set my TP. It's not necessarily at any point of liquidity area or anything like that. It's just basically a fixed RR. So as you can see, price did come up, tapped us into the trade, came up into this OTE area really nicely, and then started to push down straight away from there, which is obviously what we like to see. Now, when we started coming back down into profit and price started moving in our favor, what I do is whenever price reaches a 1-to-1 in profit, that's when I'll move my stops to break even. So when price was around here in profit, that's when I would have moved my stops to break even, and then let the rest of the trade play out basically. And that's purely because from my back testing, I found that once price has got to 1-to-1, it's either going to carry on and hit my take profit, or it's going to reverse and it would have stopped me out. So by having stops at break even after a 1-to-1, it's actually going to save me more times than it's going to affect me basically. Because a lot of people say, oh, you should never move your stops to break even, or why do you do that? Just let your trade play out, leave your stop loss where it is. And like I say, it's purely based off my back testing. It saves me a lot more times than it goes against me basically. And yeah, as we can see, that was the trade basically. A classic London reversal. Price tagged us in really nicely and then just melted all the way down to our take profit pretty much. So yeah, just a textbook trade really. A nice 3R to start the week off and start the month off. So let me know down in the comments if you did like this sort of trade breakdown video. And yeah, I'll definitely do more of them on any trades that I do take. If you do like this and you do want to see more of my strategy. So yeah, drop a comment, let me know, leave a like, and yeah, I'll see you in the next video.